Good afternoon, this is Jonathan Satovsky of Satovsky Asset Management in January of 2019 with a video blog update. So today I wanted to pay special tribute to Jack Bogle, who passed away, the original founder of Vanguard funds, responsible for the original creation of the index fund, and whose company now stewards over $5 trillion. And many can say that he's had been one of the most influential people in the field of finance the last 50 years in helping people think about investing and saving and making it accessible to people for secure futures. So there's three takeaways that, and I'm sure there's many more, but I'll highlight three that I am most fond of. One is the simple beats the complex. The second is saving has a much greater impact on people's futures than speculation, which leads to the third thing, is that education over speculation is a very important thing. So in my effort to do these video blogs, I'm going to give a little nugget of education to remind people about many of Jack Bogle's principles of thinking long term. And it's particularly important and timely to remind people because the fourth quarter of 2018 was a very sharp decline in financial assets and caused a lot of people a tremendous amount of heightened emotions. And why is that important? Because it takes people out of the idea of having long-term thinking. I learned recently about the idea of emotions being like a seesaw. And the higher one's emotions are, the lower someone's rational thinking is. So if emotions are calm, someone can think more rationally. So if you're speculating rather than investing for the long term, it leads to heightened emotions and people make a lot of mistakes along the way. So why do I share this? Because 2018 makes it hard for people to think long term because cash outperformed every other asset class in the world in 2018. But going back to the principle of long-term investing, even including 2008, you can see that stocks in the US have done marketably better, and a diversified portfolio has done marketably better than holding cash, which has earned close to zero the last decade. So being a long-term thinker and a long-term investor pays off over time, but not all the time. So that's why the importance of planning is critical, that people have enough cash and liquidity to be able to control their temperament and to control their emotions. So when we look back at the last 90 years, just to put it in perspective, how interesting 2018 was. There's only been 2 years in the last 90 that stocks and bonds were down and cash was up. And only 10 years that cash outperformed stocks and bonds altogether. But 2 years in the last 90 that stocks and bonds were down and cash was up. Just think about that for a minute. And it's been 25 years since 1994, the last time that happened. So I would leave this conversation reminding people that habits and discipline are immensely critical going into 2019 and beyond, to be able to think long term, to save, and we're going to do everything we can on our part to simplify, to make it easier for people to live a calm, chill, wonderful, elegant life. Have a wonderful January. Bye-bye.